Alrighty, guys. So we have another big week coming up in the stock market this week. A lot of companies are reporting earnings. We're going to break down 10 of those companies and break down their stocks in this video. And of course, we're going to go over the overall stock market. So without further ado, sit back, relax, hit that like button, make sure to subscribe, and let's dive into the video. And by the way, if you guys want some free money, use those links down below from Moomoo, from Weeble. Get your free money. It also helps out the channel, guys. I appreciate you all as always. And with that being said, let's dive into the video. So last week, and by the way, we're going to start off this video by breaking down the stock market very quickly, SPY, Triple Q. Then we're going to dive into these companies that are reporting earnings. So last week, you guys probably know, it was a ridiculous week for the bulls, and SPY completely broke out of the moving averages. We took the highs out from the previous week, and we ended up breaking out of the 391, 392 level, which has been a resistance for the past couple of weeks. You guys can see that right here. And overall, the ascending triangle that I have drawn out also played out. We have a golden cross. Again, we're above these moving averages. SPY looks really good in the short term, right? And this is after we got the CPI data for October. It came in at 7.7%. I think the estimate was 7.9, 8%, something like that. So for once, CPI came in cooler than expected, right? And the markets really took that and rallied with it. And by the looks of it, man, by the looks of these charts, right, it doesn't look like this wants to slow down. And I think in the short term, SPY could be going anywhere from 410, 411, 412, 15 roughly. You know, that $5 window, that was the high here from the middle of September. That's where we could be going, you know, and we have Triple Q here. Let's pull it up. And this tracks, you guys probably know, the NASDAQ 100. Triple Q also broke out of some key levels last week. You guys can see it broke out of roughly 285, which has been a resistance for a good couple of weeks, almost 2 months at this point. And we close at $288. Now, for this upcoming week, and honestly for the next couple of weeks, I'm going to be looking at $295. If that were to break, I'm going to be looking at anywhere from 310 to about 315 on Triple Q, on the upside, of course. And again, like SPY, it had a great week last week. I mean, in one day, guys, for Pete's sake, it went up 8% almost, which is unheard of. And the bulls the next day had another 2% day for Triple Q. So that goes to show the strength and the move. It's not like we dumped on Friday after having that 7-8% green day. We had another green day. We had another nice green day. Again, that goes to show the strength here for the bulls. So let's see. I feel like 295 is in the cards this week for Triple Q. I don't know. I could be wrong. What do you guys think? Let me know your thoughts in the comments, as always, guys. And for oil, let's pull oil up and see what's going on here. It's still at 88 a barrel, you know, roughly where we covered it, of course, last week. And we'll see what the futures market, markets look like later tonight. They open up at 6 p.m. on the East Coast. I'm actually filming this video at 11:30 a.m., so they're obviously not open yet. But we'll see. You know, if oil starts breaking back over 90 a barrel, mid-90s, that's where the tides could slowly start turning back to the upside again for oil. And now it's kind of in limbo between 85, 88 a barrel, you know, right around these moving averages. Let's see what direction it ends up picking. So what do you all think? Let me know your thoughts in the comments down below. And let me see what crypto's doing. I wasn't planning on talking about crypto in this video, but might as well pull it up. As you all know, everything going on with FTX, Binance, you know, who's next to go under, right? That's the $1,000,000 question. Who the heck is next? So right now at about almost noon on the East Coast, Bitcoin is down 2%. It's at 16.5, all right, pretty much holding where it has been the past, I'd say, day or two. It hasn't really gone much under 15.5, right? So it's still hovering right around there. Ethereum's at 1,200. It's down 3%. We have Dogecoin down about 5%, still in the mid 8-cent area territory. So, you know, it's not really doing much else of what we've been seeing. You know, it's pretty much just holding in the 15, 16, 17 range in terms of Bitcoin, and Ethereum about 1,200. So let's see. I mean, is there going to be another big news story, you know, this week around crypto? Probably. I mean, it's going to be an eventful week. So, you know, we'll see how it unfolds, guys. And overall, you know, that's a breakdown of quick little breakdown of what's going on here with oil, SPY, Triple Q, little, you know, points in the chart that I'm looking at. So with that being said, let's talk about earnings. Again, we have a big week coming up this week for earnings. You know, it's not like we have a bunch of big tech names, but we have a lot of big companies that you guys have to watch, including Home Depot, Walmart, Target. We have companies like Alibaba, some Chinese stocks companies reporting earnings this week, NVIDIA, which we're going to talk about right now. So NVIDIA, guys, they are reporting earnings on, I believe, Tuesday. Let me double check, though. No, they're on Wednesday. So they're on Wednesday reporting these numbers, and according to these estimates, and all these numbers we're going to talk about today, guys, these are average estimates. That's what they are. They could be, the numbers, the real numbers could be higher than this, under these numbers. We'll see. But the estimates for NVIDIA right now are 70 cents for EPS on revenue of $5.8 billion, which that would be down. Their revenue is projected to be down anywhere from 18, 19, 20% year over year. And you guys can see NVIDIA stock has rallied like no other from this 108 low, and we did play this. Well, I personally played this. I caught some of the move. I didn't catch the entire move, but it is up 51% from $108 to now where it's at $163 a share. And a lot of that move came last week. You guys can see NVIDIA last week went from 135 to a whopping, again, 163. That is a 20% move in 1 week. So, yeah, NVIDIA right now, they're running up into these earnings, which makes me a bit nervous, to be honest. And obviously investors, traders, they're pricing in. I don't know if they're now pricing it in, but they're expecting earnings to not be that great. It's not going to be a surprise. But then again, if there is a little piece of the earnings that come out, that is a surprise, maybe guidance a little off, this is a little weird, that, who knows, right? What's going to come out of that earnings call. And the stock's, again, up 50% and just 20% in the past 2 days. This could end up, setting itself up for a dump. That's just what I'm thinking here, and I'd be very cautious with it. Again, I played it, I made some money, I got out of it, but now I'm just watching it, waiting on the side on the sidelines to see what ends up happening. So NVIDIA's this week on Wednesday, guys. We also have companies like Target, TGT. Target is on, let's see, Tuesday. Let me double check. Target is on, Wednesday morning, same day as NVIDIA. And this one's not really beaten down, it hasn't really broken out quite like NVIDIA has. And it's a completely different company. But just looking at the chart, right? This one, it is a little overbought, but, I think it has some more to go. This one, if it starts now, and mind you, last week it broke out of 170, close above that high from, earlier actually that was late October. So now if this momentum continues and what I'm trying to get at here is if we break 175, which is coming up in the beginning of September, or that was the resistance from the beginning of September, which is coming up, we might be going towards 185. That'd be the next gap to fill here. That was the high from the middle of August. And from there, we have a wide open gap. Because if you guys remember, Target, not last quarter, but the quarter before that, this company cratered after earnings. It was a crazy sight. It was down 20, 30% in the matter of a couple of days. And that's the gap that we could fill here if earnings either surprise, we get good guidance. We'll see. So EPS for Target is $2.12. That's the estimate on revenue of $26.37 billion, which would be up about 2.8% year over year. Not too bad. So again, this is one that is on the brinks of a breakout if earnings are strong. Again, or not even strong, if they're better than expected, or you know what I mean, right? So I'm going to set my alert. Mark is at or above 175. There we go. If that breaks, again, 185. Then if 185 breaks, man, we could be pushing 200. But I don't want to get too ahead of myself here. Let's see how these numbers actually come out. So the next one here is Cisco, ticker symbol CSCO. Cisco is looking to do 84 cents on revenue of $13.31 billion, which would be up about 3.2% year over year. And what you're noticing is a lot of these companies, although they may be different, which they are from each other, a lot of their revenue growth is either negative or barely up or flat. You're not really seeing any crazy, well, maybe later in the video we're going to get to one here that is growing, so make sure you guys stick on throughout. But then again, you might not like what kind of company it is, but we're going to talk about it later. So yeah, Cisco, up 3.2% on revenue, if that's the number they report, again, about 13.3-ish billion. So this is one that's been above the moving averages for quite some time, but kind of stuck in a range between $46 and $44, really. I mean, the little $2 window right there. You guys see that? It's been stuck in that little window for about 2 weeks, and their earnings are on the 16th, which is on Wednesday after the bell. So Cisco, guys, I'm going to set my alert here at 46.50. If it breaks out of this, top end of the range, we could end up seeing a move on this, maybe from here towards $50, from $50, maybe even higher from that point. So, and now that I'm looking at this could be the formation. It kind of looks like the start of an inverse head and shoulders, does it not? I mean, look at that, guys. We have the left shoulder right here. Boom. You guys see that? Then we have the head right here. Then we have the right shoulder right there. That is clear as day to me, at least. Let's see if it breaks 46.50. We might be making a move even higher from there. So we also have Tyson Foods this week, ticker symbol TSN. Let's pull that up. Tyson Foods is one that's down a lot. I mean, this stock was $100 back in April. Now it's at $67. It is down 32% in the span of about 200 days, which, I mean, that is about 9 months. How long is that? Or not 9 months, however long that is. It's a little bit over half a year. It's down a good amount throughout the course of this year. And they're looking to do $1.73 in EPS on revenue of $13.49 billion, which would be up about 5.3% year over year. Not bad. And to be honest, guys, I'm not touching this thing until we get a reversal, which we're not getting any signs of that. And I want to see some higher lows, higher highs made, which we're starting to get a little bit, but, we got to start getting out of these moving averages, first of all, and, breaking out of 75. That's where I'd be comfortable. If it gets in the, low 70s, mid 70s, that is where I'd be looking at this a little bit more seriously, at least me, guys, right? And let me just say this right now. I am not gambling on any of these earnings plays. Let me tell you that. I used to buy calls, puts, do all that before earnings, made some money, lost some money, made some money, lost some money. It was just too inconsistent for me, and I haven't done that in a long time. So for all my new viewers out there, I mean, I've said this before, but if you're not, if you are new to the channel, this is not like, it's not like I'm going to gamble on these before earnings. Typically, I like seeing companies report earnings, especially if I'm looking to trade them. And, then I'll see how the stock reacts, and then I'll make my decision. That's how I've been doing it for the past couple of years, right? And trust me, in the beginning of my trading, stock, investing career, whatever you want to call it, I had, some gambling tendencies. I'll be honest, like a lot of people do when they start out, right? That's just the reality of the matter. So Walmart, WMT is another one which has been making some nice higher lows, higher highs. Now this looks like a legitimate reversal, whereas again, Tyson does not. It needs to start reversing, whereas, again, this looks good. So Walmart is looking to report EPS of $1.32 on revenue of $147 billion, guys, which would be up 5% year over year. Not too bad. And they're looking to report on the 15th, which is on Tuesday before the bell. So this is on Tuesday. We haven't said any, I don't think all the earnings we've talked about so far are on Wednesday. So this is actually on Tuesday in the morning, and this is one that is about to break out by the looks of it, or it wants to. We have an ascending triangle. You guys see that? Here we have resistance at about 143, and we've been kind of crammed up in that 143 range for a good almost 2-3 weeks now. So if Walmart has good numbers, we start breaking that mid 140 mark, man, this thing could really start gaining some momentum towards 155, towards 160, and, we could fill that gap, 8, 9, 10%. That is totally possible. But again, I'm not gambling on this. I'm going to wait till the numbers come out, and then I'll make my decision, even though it might mean I miss the move. And trust me, I miss a lot of moves. And I know you guys can relate. You probably miss a lot of moves. Everybody misses a lot of moves if you're cautious and you have a strategy, a process behind what you're doing, and you have rules for yourself, right? You're not just... If you have no rules or no this or no that, no strategy, no process, you're just going to throw money at anything you see. And that's just not going to work at the end of the day. So Walmart, you got to watch it. Home Depot is another one, ticker symbol HD. They're looking to do $4.11 in earnings per share on revenue of $37.93 billion. And they're looking to report here on Tuesday before the market. So them and Walmart, they're on Tuesday before the market. and this one looks pretty overbought. So to be honest, I'd be careful with Home Depot. It is above the moving averages. It is breaking out, which is nice, but let's see if it could settle in the low 300 range, 305. Then maybe we can get a dip buy or a dip entry on HD. And I'm not telling you guys what to do. I'm just thinking out loud here, right? And, maybe from that point it goes to 330, maybe even higher than that. So Home Depot, let's see what they end up doing. This one looks pretty decent, honestly, but again, just a little bit overbought. And now we have some Chinese companies. We have Tencent reporting, which I know you guys don't like the Chinese companies, and trust me, I know they're ridiculously risky, and I've lost my shirt on Alibaba. I'm not even going to just sugarcoat it. I'm down. I'm down a good amount on Alibaba, but it was a speculative position to start, so it's not like I'm completely screwed, and I've been open about that. I told you that months ago that I was buying Alibaba as a speculative position. And, I averaged down, over the course of the months. But still, I'm getting nailed on this Chinese stock. And thankfully, it's the only one that I'm really down massively on. NIO is one that I own that I'm pretty much at this point. I locked in a lot of profits on NIO. But at this point, I'm pretty much at break even, I'd say. I think my average cost is like in the 10 to 12. It actually might even be down on the shares that I have left. But either way, Baba I'm down a lot on. Let's just put it that way. And 10 cents not one that I own, but who knows? Maybe one day. So they're looking to do EPS of 48 cents on revenue of $20.66 billion. And clearly the chart is not looking good, although it is up $10 in the past couple of weeks. It is down massively over the past couple of months and still clearly in this downtrend. So I'm going to set my alert on Tencent at $35. We'll see what they do, guys. They report earnings on the 16th in the morning. That's Wednesday morning. Let's see. JD.com is another one that I'm going to pull up and show you here. EPS 63 cents for them is the estimate on revenue of $34 billion, which would be up 12%. Not too bad. Again, we have a lot of companies here barely growing revenue, flat or declining. JD's not doing that bad. I'm sure their growth, for sure, actually, their growth rates have come down. But 12% during these times is not that bad. So JD's slowly been breaking out. It's clearly, above the moving averages. We have an inverse head and shoulders. You guys see that. You guys got the left shoulder here, head, right shoulder, clear as day. So let's see how this plays out. JD could have some more upside, maybe towards 55, $60 if earnings come out, which are again on Friday morning. It looks like, Friday morning here on is that Friday, right? Yeah, Friday morning Central Time. So Baba is also this week. And by the way, guys, if you haven't gotten your free stocks from Moomoo yet, $10 plus up to 15 stocks each, up to $2,000. Use that link down below. Deposit at least $100. And again, you get $10. It's a free cash coupon plus up to 15 stocks each, up to $2,000. And you could also get 12 stocks from Webull with any amount deposited. And just know all those links down below help out the channel. I appreciate you guys as always. So Baba's this week, EPS looking to come in at $1.64 on revenue of $29.34 billion, which would be up about 5.2% year over year. And of course, Baba is down massively. We don't have to get into that. Again, like I said, I'm down pretty big on Baba. And, we'll see. Their earnings are coming out on Thursday in the morning. They're up a little bit in the past couple of weeks, but really nothing that's going to break them out of the downtrend. So we'll see how it goes, guys. I'll set my alert at $75 on Alibaba just to see how it does. And, we'll see. We'll see what to do from there. And the last stock for this video, guys, is none other than Foot Locker. And you can see clearly here, I'm on my phone today. My iPad is dead. Freaking iPad died on me. But we have all the notes right here. Boom. That's all we need for the video. So Foot Locker is reporting again this week. They're always on Friday. If you guys didn't know, they're on Friday morning. And they're looking to do $1.14 in earnings per share on revenue of $2.1 billion, which would be down 4.2% year over year. You guys can see that. So, yeah, that is pretty insane. But listen, this is one that, at one point it was down. It's not really insane. I don't know why I said that. It's not insane at all. But, Foot Locker is one that the drop from a couple weeks ago, I guess, was insane. And just a day or two, it went down 20%. Then it consolidated. Now it's starting to push back to $34. You guys can see that right here. If this point breaks, we could be getting ready for a big move from 35 towards 40.41. That's the next gap that could fill. You guys see that 10-12%? That is where we could be going. So Foot Locker, again, is this week on Friday. We'll see how it ends up playing out. And with that being said, guys, I mean, that's it. Markets are looking very good right now. We kind of, had that big rally after CPI. Is it going to be sustainable? I think it's possible, at least in the very short term here. I think it's possible. So what do you guys think? Let me know your thoughts in the comments. Hit that like button, subscribe. Don't forget to get all your free stocks down below. Join the Patreon. Subscribe to my second channel, Stocks Talks Money. I'll see you guys in the next video. Thanks for watching as always. Peace out.